Hello, everyone. Welcome back to Financial News. I'm Ron Jankowski with Channel 4, and of course, my co-host is Paul Munichel with Ameriprise Financial, and Paul is a financial advisor with them. Today is January 24th, 2022, and Paul's going to give us an update of all the stuff that took place in the marketplace. Paul, I'll let you take it from there.
Thanks, Ron. I'm going to start out today's show talking about the Q4 earnings season that indeed starts to ramp up this week. Now, through last Friday, 66 or about 13% of the S&P 500's current 505 constituents had reported their financial results for the fourth quarter. Now, overall, S&P 500 companies are expected to generate year-over-year earnings per share growth of 23%. That's on sales growth of about 13%. Now, although the sales and earnings estimates do reflect relatively strong growth as compared to historical averages, today's growth estimates for the period are largely in line with last week's estimates. This signals a slowdown in the pace of outperformance we've seen in recent quarters and could further pressure markets should the lack of outperformance continue through the current reporting season. Now, this is going to be one of the heaviest weeks of the reporting season, with 105 or about 20% of the S&P 500 companies scheduled to report. Aggregate earnings per share for Q4 are now forecast at $51.86, or about $1.10 higher than where estimates for the period stood at the start of the quarter. Now, through a solid gain, the improvement over the course of the period represents a clear deceleration in the pace of inter-quarter earnings per share adjustments. All data mentioned in this commentary, we sourced it from FactSet, and we've got charts and additional information on this topic as well, if viewers at home are interested in seeing more.
And Paul, as of this morning's news from Ameriprise I received, I think you're going to have some comments to make. The U.S. stock futures are lower again this morning after posting three consecutive weeks of declines led by growth and momentum factors.
Yep, I mean, there's a lot of issues going on in the economy right now that affects stock prices and causes concern for investors. There's nothing that anyone doesn't already know. Inflation, COVID, what's the Fed going to do about interest rates, what may happen with Russia. All these unknowns the market doesn't like, and when the market doesn't like something, it usually goes down or can go down. It's kind of what we're experiencing now. And January's been such a rough start for the market. You're starting to see traders with margin calls coming in, selling in the pressure, all kinds of things that kind of accelerate the downward market.
Yeah, a lot of technical factors.
Technical factors, when you align technical factors with fundamental factors and worry about earnings and everything, something like we're going through now is possible.
Well, investors' attention remains focused on Fed policy and relatively lackluster earnings data versus the beat and raise trend in 2021.
That's really exactly what I just said. Like,
Yeah.
the earnings are not coming in as outperforming as we had expected. What's the Fed going to do with interest rates? All these things are concerns for the market.
The other item that was mentioned is Europe is off about 2% midday, while markets in Asia finished down about 1%. So there's some correction going there.
Yeah, I mean, those
well.
are decent one-day drops, 2% and 1%. I mean,
Yeah.
that's something to take note of.
And the U.S. Treasury yields are lower, with the 10-year under 1.75. Gold is a plus 0.5%. And I said the 10-year is under 1.75% is what I meant to say. Gold is a 0.5% and WTI crude is flat. I was hoping that we would see that come down a little, but give us some more relief at the pump. And the Bitcoin futures are down 8.5%.
That's a big drop for Bitcoin. 8.5% of anything to lose at an open of a market is not good.
But isn't Bitcoin kind of risky anyway? I mean, it's dramatic.
Yeah, I mean, there's all those cryptocurrencies. There's a lot to be understood in there before you invest. I'm not saying anything positive or negative about it. Just there's a lot of research you should do before investing there.
Okay, and then I want to mention that the year-to-date returns, S&P 500 is a minus 7.6%, the Dow Jones is a minus 5%, and NASDAQ is a minus 11%.
We are not used to hearing numbers like that from you for almost just 2 solid years. It's been up, 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 up. So
But
only
with all the
January.
corrections that we've had, obviously this would be in a minus.
Yeah, and it is only January. We don't
Yeah.
invest, well, if you're a long-term investor, this is just 1 month, right? We
Yep.
still got 11 months to go in the year. So
Yeah. Lots of positive things can happen within a short period of time.
last time I checked, the year does not end on January 3rd.
Right.
You know, at the end
That's
of
a good way of
January.
putting it.
Yeah.
Excellent, excellent. Okay, well, thank you, Paul, for that information. Stay with us. We are going to be right back with Your Money, a show that will be talking about a topic that Paul usually shares with us. Stay with us. And we're back with Your Money, and Paul has got an interesting topic, and it's called long-term financial planning. Paul, I'm going to let you take it away.
Thanks, Ron. You know, we're going to look a little bit at these financial wellness programs that you may see from your employer. And these things, they do benefit both the employees and the employer, especially if you're a small business owner. You know, chances are that at least some of your workforce that could be stressed and distracted by worries about money, making them more frazzled and less productive on the job. You know, studies show that 73% of Americans say that their finances are the #1 cause of stress in their life. And for those who are employed, nearly half say that personal financial issues create distractions at their workplace. Now, these statistics could paint a worrisome picture of the mental health of your employee population. They could also impact your company's bottom line. Each year, employers lose an average of $1,900 per employee in lost productivity due to financial stress. Now, this helps explain why more and more employers are making financial wellness programs available as a workplace benefit. Now, financial wellness is mutually beneficial, as I said, for both the employees and the employers. Such programs can improve your company's financial health while boosting your employees' productivity and engagement. So let's take a closer look at employee financial wellness programs and the benefits that they can bring to, again, both the employee and the employer. Probably the best place to start is what exactly is a financial wellness program for the employee. Employee financial wellness programs, the programs that help employees better manage their finances and reduce financial worries. As such, they contribute to a better overall financial well-being for employees. When it comes to employee financial wellness, employers can implement a variety of different programs and offerings. Some choose to focus solely on financial education, while others may layer employee matching, financial assistance, and other opportunities into the equation. Educational focused programs, for example, may provide employees with financial workshops about home ownership, retirement savings, budgeting, or debt management. Employer matching programs may involve matching a certain percentage of retirement contributions employees make to their 401k or maybe to their student loans. And other types of financial assistance could include tuition assistance, maybe medical bill negotiation, or financial planning subsidies. The key to a successful financial wellness program is first determining the specific needs of your employees so that you can more accurately meet those needs. Different workforces will have different financial situations and necessitate different programs. Another question to ask yourself is, why is it important for employers? So in a recent study, nearly 70% of employers say that they recognize the value in offering financial wellness programs to make them more competitive in hiring and retaining employees. If you haven't explored a financial wellness program for your employees, you may want to consider how adding one could benefit your organization. Doing so may provide a couple of key points. One, the potential to enhance workplace satisfaction as your employees gain greater confidence about their financial direction in life. And two, improved productivity among employees who are no longer overwhelmed with concerns about their financial situation. Three, better retention of employees who find enhanced gratification from work they are confident is fulfilling their financial needs. And four, the potential that employees who carry less stress about their financial well-being will enjoy greater health, potentially resulting in fewer medical issues and reduced health care costs. You know, financial wellness programs should be looked at as an attractive add-on to your company's total compensation plans. Remember that plans can be structured to suit the needs of your business, and we always recommend that you reach out to your financial advisor for more help in any category dealing with financial planning. At Ameriprise Financial, we do have some programs that are designed to benefit your employees, and seeking that I am a financial advisor at Ameriprise, do recommend, if you look for more information on this topic, feel free to reach out to me directly, and I can do my best to try and help you. I can be reached at 708-226-3412.
Paul, I just want to mention, excuse me, a lot of smaller companies, especially retail stores and things of this nature, cannot afford to do much to help the employees. And so for the sake of the employees, they should be contacting for themselves their financial or a financial advisor if they don't have one, and develop some kind of a program. And the financial advisor, excuse me, can find where your weakness is and where they should pay attention and correct that. And
Yep.
There's help out there. You just have to search for it.
Right, you gotta want to save for retirement, and it's
Right.
like anything. The help is out there. The solutions are out there. You just got to seek out the solutions, whether by calling a financial advisor, doing your research online, whatever it may be. There are tools to help you plan, structure, and fund your retirement.
Exactly. Well said. Well, for Paul Municle with Ameriprise Financial, myself, Ron Jankowski with Channel 4 in Palos Heights, we wish you a good investment day.